I'm the 5-Minute Professor, and today's Financial Friday lesson is about single stock risk. So, the risk of a single stock. If you own one stock in your portfolio, if there's one stock that you own, you have a risk that something crazy is going to happen with that stock. Something unexpected, something that comes completely out of left field. The example I always like to use, what happens if the CFO for years has been cooking the books to make himself look better? For years. And then one day there's an audit and you find out the CFO's been doing this. So one guy has been doing this work and he's been moving money around and he's been creating shell organizations, and it's just to make him look better. And he always thought, hey, you know what? We're in a good business. It's going to come around. It won't be forever. Well, one day, the day of reckoning comes, and suddenly your stock takes an enormous hit that you couldn't predict. And you had your drop-dead price set, and you got sold out of the stock. That is single stock risk, and there's a way to mitigate that. There's a way to make it so that if you can't afford to have a big hit because one company can have bad news, you've got to mitigate that single stock risk. Really, investing in individual stocks is a rich man's game. Someone that can afford to lose tens of thousands of dollars. If you can't afford to lose the money that you have invested in one stock, then you can't be invested in that one stock. And that's the bottom line. So there are a couple of different baskets that you can use to mitigate single stock risk. One is the older vehicle. It's called a mutual fund. It's a basket of stocks which have been purchased together, and it has a set portfolio. Now, mutual funds can be sectors. It can be grouped by the size of the company, called market capitalization, small cap, medium cap, large cap. It can be just the largest of the companies. It could be pre-existing groups like the Dow Jones or the Fortune 500. So you can have these baskets of stocks that are mutual funds. Now, mutual funds are a pretty good vehicle. They're pretty good. You can put money in systemically so that, let's say you want to be putting $1,000 in every month. You want to just dump $1,000 in. So instead of having to purchase whole shares broken up to $1,000, you're putting $1,000 in, and then once a quarter or twice or 3 times a year, we're going to make a systemic buy into your system, and you can buy fractional shares, and it's no problem. They're good. They're good. They're not great, but they're good. There is a better vehicle, though, because when you think of a mutual fund, you think of it as a basket of stocks that trades like a single stock, but that's not actually how mutual funds work. Mutual funds trade on net asset value. They trade on the underlying stock, kind of, but not really. If you want something like that, you want an exchange-traded fund, an ETF. An ETF actually is a basket of stocks. It is a basket of stocks made up by people buying this ETF and the ETF turning around and buying a certain basket of stocks. So with a mutual fund, you buy shares of a mutual fund. You buy partial ownership of the mutual fund. With an ETF, you buy shares of the ETF. You buy the stocks that make up that ETF. If they pay a dividend, you get that dividend as often as they pay a dividend. Usually it's quarterly. But you can also sell it at its value when it's trading, because it's constantly trading at its value. So you can buy and sell the shares at a set known value. It's a great advantage to the ETF. Now, you can't do the systemic buying that you can with a mutual fund, but you could also just hold on to the money and buy systemically and save yourself some cash. Perceptum, Quispium, Damnatium. Learn something, damn it. I'm the 5-Minute Professor, and thank you very much for listening to today's lesson. If you have any comments at all, please put them in the comments section down below. And of course, like it and subscribe to the channel. But most important, if you liked it, if you commented, and if you subscribed, Tell your friends. Perceptum, quispium, damnitium. Learn something, damn it.